and Assalamualaikum. Today we will be presenting the audit expectation gap for assignment auditing. My name is NURIN IZZATI and my roommates are AYUNI, NURDIYANA, SHAFIRA, Amirul, Hasif from SC110.
Now we will go to the introduction.
Do you know that the audit expectation gap has a long and distinguished track history? Well, the expectation gap between auditors and financial statement users has persisted for the previous 100 years, despite the fact that the phrase was only recently introduced to the auditing scene. The existence of an expectation gap between the auditing profession and the general public is causing significant concern. Liggio was the first to introduce the term expectation gap to auditing in 1974. Since then, mounting evidence has pointed to the existence of an expectation gap. What is expectation gap? So here is the definition of expectation gap. Expectation gap is the levels of expected performance as envisioned by the independent accountant and by the users of financial statements. The Coin Commission broadened this definition by examining if there is a gap between what the public expects or wants and what auditors can and should reasonably expect to achieve. Next, there are three components of expectation gaps, which are knowledge gap, performance gap, and evolution gap. Then how do these gaps occur? For knowledge gap, it occurs when the general public is unaware of the auditing procedure. As a consequence, their impressions of auditors may differ from what they actually do. When the public understands how the auditing process works, the knowledge gap can be bridged. Performance gap, or we can call reasonableness gap, occur when there is a difference between what auditors are expected to achieve and what society can reasonably anticipate. However, the auditors fail to meet the expectations. This is because auditors perform tasks that they are not supposed to perform. This could be due to a lack of focus on audit quality or inconsistencies in practitioners' and regulators' interpretation of auditing standards. These expectations are reasonable and they form the foundation of the performance gap. Lastly, for evolution gap, it stems from a misalignment between what auditors are intended to perform and what the public expects. The public's desire are the fundamental source of the evolution gap. The knowledge gap is linked to this gap, and a large knowledge gap can make understanding the true evolution gap more difficult. For example, if they are uninformed about existing policies.
Now we move to the first argument, which is accounting versus auditing. People nowadays assume that these two words is the same thing. However, these two things are completely different. Let's find out what is the meaning of accounting and auditing. According to the American Accounting Association AAA, accounting is the process of identifying, measuring, and communicating economic and financial information to permit informed judgment and division by the users of the information. On the other hand, auditing is a systematic process of objectively obtaining and evaluating evidence of the financial statement. Despite the fact that accounting and auditing are different in meaning and their roles, these two things are still complementary to each other. Because the audit objective and technique has changed, there is a lot of mistreatment about auditing profession. Before I explain the major conflict between the auditor's statutory role and public expectation and its reason, let's find out the auditor's role. First, auditors are required to prepare an audit report based on financial statement. After that, they can form an opinion on the overall views of financial statement. Now, the major conflict of mistreatment to auditing profession is public slowly lose their confidence in audit process. Why is this happen? It is because the belief of auditors function. For example, misconceptions, ignorance by consumers, unreasonable public expectation, weak laws, and many more. This also could be an issue because of the users' lack of understanding of auditors' role.
This audit expectation gap has become a threat to the auditing profession due to many reasons. From Tricker's point of view, the auditing profession time lags in recognizing and responding to constantly growing and rising public expectation. The audit expectation gap is linked to a lack of independence acknowledged, and it is said that audit report has transformed into document that will help promote the company's image. Misconception, users' ignorant, unrealistic public expectation, inadequate legislation, and poor quality auditing work were listed as causes of the audit expectation gap. Because of this, there must be consequences. Based on Sika et al., the audit expectation gap has a negative effect on auditors' professions, such as tarnishing the credibility, earning potential, and reputation of auditing firm. This audit expectation gap can be harmful to the users of accounting information, regulators, investors, and government, because public trust is the heartbeat of any profession. If the public lost their trust in auditors, it will result in credibility problem and the profession perceived value will decrease.
Expectation gap gives auditors a lot of problem. One common issue that appeared because of expectation gap is unreasonable expectation from the shareholders. They will expect the auditors to do various types of tasks that is not even in their job description. For example, they will expect auditors to tell them if the company is going bankrupt. This is not in the scope of the auditor's job, so it is unreasonable to overwork them unnecessarily. Another thing they will expect from the auditors is to give them some report or details about a company's financial statement. This is unreasonable for the auditors because the auditors are not involved in any financial statement of an organization.
Next, some of the analysis and evaluation of the threat to auditing profession. First, in 2011, ADME and UDEL started a survey of over 200,000 sample respondents in Nigeria and found out the considerable difference between the groups regarding the responsibility of auditors. Next, OSENI and AHIMI has obtained a result about outstanding contracts in auditors' duty for preventing and detecting fraud. In 2016, OPOLOS has concluded that the new auditors' reporting criteria will undoubtedly close the performance and communication gap, including the liability gap.
Based on the analysis, there are two groups in the study and have received 430 copies of the questionnaire. The users group has received 300 copies, while the rest are from auditors group. First, the respondent response showed that 66.67 response rate is users group and 70.67 response are from auditors group. The reveal there is a significant difference between users and auditors when it comes to the role of auditors in detecting errors and fraud, maintaining a good internal control system, preventing errors and fraud, keeping proper books of account records, preparing financial statements, and reporting future prospects. The two groups are certain that the auditor should be objective and non-biased in the performance of his duty. The results show a huge difference in the perspective of the users and auditors on whether an unqualified audit report is a proof that the company is well run or not. The result shows the usefulness of audited financial statement in judging performance and making decisions. The study's main goal was to evaluate the degree and character of the audit expectancy gap in Nigeria objectively. The outcome of the hypothesis confirmed that the alternative hypotheses were unsuitable for this investigation and thus rejected. As a result, they find that there is a gap between users and auditors' judgment of real liability, decision usefulness claim, and accountability.
For the article review, I have chosen two articles to compare with. The first thing both articles has in common is in terms of explaining main issue of expectation gap. Expectation gap consists of knowledge gap, performance gap, and liability gap. Knowledge gap is a situation when shareholders do not understand what happens during an audit and is unaware of the usual auditing policies. Performance gap is about what auditors should do for their job and what they actually are able to perform. And liability gap is a situation where one would describe the legal liabilities of the auditors in order to detect fraudulent activities. On the second article, instead of liability gap, it shows about evaluation gap. Evaluation gap is what the public wants auditors to do instead of their job. In the term of definition of expectation gap, the definition from the first article is the difference between what the public expects from the auditing profession and what the auditing profession actually provides. The definition from the second article is the difference between what the general public thinks auditors do and what the general public would like auditors to do. And for the regulation described from the article, both of the articles say that the auditors has to follow a certain regulation that is GAAS, Generally Accepted Auditing Standard.
There are a few recommendations for closing the expectation gap. First, audit reports are expanded and the phrasing of audit reports is changed. This enhances the public's comprehension of management's and auditors' duties. According to a few studies conducted in the US, the UK, and Australia, expanding audit reports will give non-auditors a greater grasp of the scope, procedures, and nature of the audit. Bankers, for example, regarded enlarged audit reports to be more valuable and understandable than short-form reports, according to Miller et al. In 1990. Modified wording is also useful for users who have different interpretation of what audit report means. Accountants and advanced users are the example. As a result, one way for minimizing of the explanation gap is to expand audit reports and change the wording of audit reports.
Second, disclosure key audit matters. If they are able to disclose KAM, they can get rid of the misunderstanding about auditors' duties and responsibility. Other than that, its effect shows in a study by Kasnor in 2019 that the disclosure lowers the user's expectation in audit assurance and responsibility.
The easiest way to close the expectation gap is to educate the users about what the auditors do based on GAAS regulation. Tell the user what the auditors are providing and what they are not. If some of the users ask auditor to do something that is not in the scope, the auditors should try to reduce the service to an acceptable level, and if not, the auditors should not accept the service. Otherwise, the auditors would block the auditor's independency rule.
An auditor should not be allowed to provide both audit and non-audit services to a client organization to avoid potential conflict of interest. They should also help in developing a new business reporting model that will enable the public to easily identify non-financial information. Other than that, auditor communication should be improved to address users' misconception about audit service and function. The International Auditing and Assurance Standard Board (IAASB) introduced the new auditor's report in 2016 in response to the recommendation of previous study on the expanded audit report. But local regulatory bodies in the country must ensure full compliance and enforcement in order to achieve the desired result.
For the conclusion, we know that auditing is not an easy job for obvious reasons, such as expectation gap, where people expect you to do more. But fortunately, every problem can be solved, since there is a solution to every problem. Most of the auditor can refer to MIA by law before making a decision to do something in auditing to avoid any problem.
That's all from us. Thank you.